Hello guys, welcome back to a new video. So in this one, I'm going to give you guys a recap on USDCAD. So I'm going to start off from the weekly, work my way down and just show you the 1 minute entry now. This video is quite important because we're trading with anticipation with a higher time frame, and you guys will know what I mean in a minute. So yeah, without further ado, let's just dive straight into it. So here in the weekly time frame, as you guys can see, we did come back and tap into these May POIs back in 2020. We were previously moving bullish. Then from there, we did chalk bearish here as well. Now, obviously, we have this high and this low, because obviously this wick's lower than the candle lows. The kind of wick lows to the left and right a bit. So that's why it's just chalk here. So if you look here, price obviously chalk bearish. Now we did come back, tap into this sort of demand area, but however we did leave this slight imbalance behind. So, you know, and obviously price seems to be pulling back into this area now. So that's an anticipation. We could see price maybe tap into that more long term. However, that's not what I'm focusing on. I'm focusing on what price is currently doing, right? So we did chalk bearish, and now we have this bearish range with this low and this high here again. Study the high. Why? Because the candle high, wick high to left and right a bit is obviously lower than the middle one. So that's that high. Then we came back and tapped into this area, right? And then obviously price started to move bearish. We were obviously still within this bearish range, anyways. Price moving bearish, obviously bearish candles everywhere. And then on the daily time frame, it's just a refinement of the weekly zone, and obviously price came tapped into that. It was a daily chalk as well, and obviously we sort of confirmed this trend, and we had this high and this low here. Then we did chalk back bullish here, right? So we had a bullish range, we had this high and this low, and obviously from there, price then just sort of, I'm just trying to see if that's a closure. I think that's a closure actually. And these little details matter as well. So just zoom in if you ever need to. No, that's not a closure though, so this is still a high and this is the low. Then obviously we came and tapped into it here, and we had this low and this high. Now this is the range I believe we were trading in as well. And at this point it is obviously a bearish range. It's just chalked. I am looking at this area as well, so what I am looking at this point is price potentially coming up to these highs. So you know, I don't want to be in a trade for too long, so I want to obviously catch the move, because obviously the weekly daily is obviously moving bearish. So ideally I want to catch those, you know, intraday sells if there are any lining up. But if we'll see what the intraday is saying anyways. I'll show you guys, it makes sense. So on the H4, we had this is the daily range. We can move that now. Then on the H4, we chalked bearish here, right, off this high time frame supply. We broke structure here and here as well, and then we have this bearish range. So this low and this high. Price unfortunately didn't break below with the closure, it just wicked it, but we came back, tapped into supply zone here on H4. Then on the 15 minute, price obviously started to move bearish. So if we look here, price started to move bearish here on the 15 minute, you know, obviously chunking bearish, you know, confirming that sort of bearish trend. And then price here at this point, we're within this Asia session range. Now for those of you that don't know, I basically use Asia session range, certain hours that I use, probably guess anyways from the chart, but there's certain hours that I use, and basically I'm looking for a sweep of either side. I guess you guys could say a liquidity sweep, liquidated, whatever you want to call it, manipulation. Basically I'm looking for a sweep of either side, and I'm basically anticipating that we'll head back into the Asia session range and at least touch the other side. Now at this point price starts to move bullish, right, and we are within a bullish range. However, we tapped into a supply zone. We did tap into supply zone, but obviously this is inside the Asia session, so that's just violated it. I guess you could say there would be something within here, but unfortunately we violated that as well. There was no reaction on the lower time frame, so we're going to see if there's a reaction here, and we'll just jump to the 1 minute. And at this point the daily is bullish, so I'm just going to keep aware of the daily low, and this would be the high as of now, but obviously it's not a confirmed high because there is no candle next to it that's lower, right? So we need at least a couple of candles to confirm that high, but as of right now we are within a bullish range, so it's important that we just remember that. Okay, so the intraday time frame is bullish, but the H4, the daily, the weekly, the high time frames, that's obviously pointing to a bearish bias, right? So we've basically gone with a high time frame, but the intraday is obviously bullish. So if the, I mean, don't get me wrong, if this intraday time frame can, drop lower and take out these lows, then that would be great, because obviously it's in line with the high time frames. Therefore, those would be obviously the high probability setups in which we can look to short from. However, this is me trading with anticipation that we're going to pull back here on the 50-minute, because after a an impulsive move or a rally, whatever you want to call it, you can expect a pullback within the markets. Price does get exhausted and it will pull back. That's my viewpoint on it. And basically what I'm looking at here is price will, well, I'm anticipating anyways that price will pull back at least into and fill this imbalance, because imbalances again is key to look at. So if you look at this imbalance here, we have a pretty big imbalance as well, pretty impulsive candle within the 3 candles. So we're anticipating a pullback. So if we just drop to the 1 minute, what can we see here? So price didn't tap into the time 15-minute supply zone here. However, we did tap into it here as well. So now we can look at our chart. However, I just want to look at the ranges real quick. So I'm going to go ahead and do that. So we have a low here and a high here. This is the current range. And then obviously we didn't chuck here, but even then we didn't tap into the supply zone. So it's just a fake move. A lot of you may call it inducement as well, to be swept up here. So for those people that are looking for sales here, they're being swept out up here, sort of. Anyways, we then obviously be bullish. We have this high here, and obviously we go back and we have this low. So at this point, we would obviously need to see price take out this low. However, price did obviously close above here, but we would need to see the next couple of candles to confirm that high. So now we can mark the high, because obviously this candle, these 2 highs, the low next to it, this candle wick high, this candle wick high is obviously lower than these 2 highs. And obviously this was a previous high, we broke that. We go back and mark the low, right? Then what we're looking at is a chalk. So we may break above, or we break, there we go, we break below. And that would obviously be our chalk. Now, at this point, obviously what you can do is go ahead and obviously mark that up and have your your short position of that, right? And what I will do is, for this video's sake, is I will do that. However, what I'm going to do is, this is not the entry that I was actually looking for. There's an entry further on down the line that was actually one that I had my sell limit on. So we tap into the trade. At this point as well, you just got to be careful. These look like relatively equal highs as well. This is the 15-minute high as well. So I actually don't know what happens with this trade, but it doesn't matter, because this is not the entry I'm focusing on. But let me just check if this is just chalked bullish, because I believe it has. Yeah, so we chalked back bullish here as well. As you guys can see, we closed back above. I'll remove this as well, because we don't need that. That's just the 15-minute high. What we will do as well, we'll look at the 15-minute. And if you look at the 50-minute, that's a good sign, because price, obviously this bearish candle has obviously closed below this bullish candle. So this is indicating that, potentially we're going to switch hands. Bears are starting to kick in and take control. So we'll see. And then at this point, I missed this entry here. And then at this point, what happened is obviously price chalked back bullish. We have this high, we have this low, and we chalk here. So I'll just map out the high and low for you. And obviously, for those of you guys that don't know, I do use wick breaks as on the 1 minute, but I don't use wick breaks in any other time frame. I do on a weekly as well, but I don't really use a weekly as much as I do for like daily 4 or 50-minute. But yeah, so I'll keep this trade open for now. So we'll just leave it. This here would have been your first sort of entry. So if you were looking for an entry off there, then that would obviously be your entry. Stops above. And you'd be in a trade at this point. I'll move this for now. Now if you were having them obviously above the high, right there, then you probably would have been stopped out. No, you wouldn't. Okay. Never mind. So this would have actually been a decent trade from the chalk alone. Even though price did chalk back bullish, and you could have cut the loss there, but obviously with a bit of spread, I think you probably would have been taken out. It's a bit of one to argue over. but this is the entry that we're starting to look at, is this move here. So price chucks bearish here, and then obviously you take the chuck entry, right? If you're one of those guys as well, I just want to mention here quickly, I do take chuck entries, but if you only look for breaker structure entries, so confirmed trend, that's completely fine. It would work out in your favor anyways, because you'll see in a minute. But if you only look for chuck entries, that's also fine. For me personally, like I said, I look for chuck entries. That's clear enough for me. I don't really mind. But I also will take breaker structure entries as well. So basically, chuck for me, I view it as unconfirmed trend. Breaker structure for me, I view as confirmed. Sorry. So you got chuck as unconfirmed and breaker structure, which is confirmed. So when price chucks, it's an unconfirmed trend. When price, breaks the structure, so double break, then it's confirmed trend. So if you only want to look for a breaker structure entry, then obviously you can, because it, in essence will be higher probability. But I don't sort of value the probability based on the chuck or the BOS. It basically goes into everything else. But that's not something I'll discuss today. But what I'm trying to say is, it's okay if you want to take chuck entry or break structure entry. It's just whatever works for you. All right, no two trades are the same. So just because I take chuck entries, that doesn't mean you take chuck entries, right? You do whatever you want to do. And then from here, we'll just monitor price. Now you can manage the trade structure if you really want to. You can target the higher time frames. Up to you. At this point, I skipped a little bit too quick, but we obviously broke structure here, and obviously we have a new low and a new high. And from there, we have this POI here, M1, and then obviously IG. What the hell? Oh, there we go. And then obviously you can go ahead and, if you missed the first trade, have your stops above that one, and then to this trade. I'll just clear it up because it's quite messy. And obviously we have this one as well. Right. And then we failed to actually tap into that zone, but it's important that we adapt. Pretty big wick, so I'll probably look at a wick on this one. Now this was actually a this was my entry in real time, but however I accidentally put in the stop as my entry for some reason. I have no idea why, because when I was at the time of obviously taking this trade, when I was inputting the selling orders, I was downstairs at this point, so I missed all of these moves here. I was looking at this as well, but I didn't take the entry. But I missed all of these entries, and then I came back upstairs and obviously seeing this move play out, and then I went to go set a sell limit, but because I was rushing and stuff, I just accidentally put the wrong things in. Then I just didn't get tagged into the trade or anything like that. So we're in the trade, and then basically what we're looking at is, from here you can either manage a structure, or what you can do is, which what I was ideally looking to do, is look to just target this demand zone here, down here, and it lines up with this imbalance because it'll fill this imbalance, tap into demand. And obviously because it's a bullish range, you've got to remember that the 50 minutes bullish, so don't expect price to go all the way to the low, because that's what people do, is they'll obviously, like, for example, target this here, but then they forget the ranges and price is bullish, so it has no reason to drop down here. So therefore, just remember the high time frame ranges, because sometimes a lot of people will forget that, and then they'll see price drop a little bit into profit, and then they'll get taken out or break even or whatever. So yeah, just be wary of that. If you're managing the structure, that's completely fine. What you can do is obviously map out the high time frame sort of POI, and then start to manage it there with structure, or you can map out the premium discount of the range, and then obviously as soon as, because the way I see it, the lower the price drops, the probability decreases in terms of the trade following through. So if you want to target around the midpoint of this obviously equilibrium, or somewhere in the discounted zone, then that's fine. But just be cautious, because like I said, the more it drops, the probability decreases of this trade continuing to hold it, like expecting it to drop lower. Sometimes it will drop lower, sometimes it will just continue to break below the low. But ideally what I'm looking at is trying to line up all those time frames using the way I map out the highs and lows, and then those will be the highest probability setups, and then I sort of grade those setups based off that. So this here is still quite a high probability set, because weekly, daily, 4 hours, all still pretty bearish, and the 1 minute obviously, and the 15 minutes the only time frame it's not. So I'll just go ahead and just skip price and show you what happened, and then from there we just came back up. So we came near to the low, so I'll move that now. Well, I don't know what we actually did. I didn't check all this over here, but we did come back up. Okay, we came back up, and we haven't closed yet, but we swept those highs. I think we did close here, so this would be the current high and low. Back in the bearish range, same process. But yeah, I hope you guys understand what I'm trying to say there with the targets. So just be cautious when you're targeting. So let's say if we're just targeting this demand zone, that's fine. Then there you go, 16.6R. If you're managing a structure, so you can manage it two ways. You can manage it looking for a chock and close a trade. Again, you can manage it closing the trade after a break of structure. So it's really up to you how you want to do that. I'll show you both. So if you were to enter this trade here, even if you enter anywhere up here, price still moved bearish and we didn't chock, we didn't break above, so you'd still be in a trade. However, if you were in this one, price did chock, so if you closed the trade off chocks, you would have cut your loss there short. But like I said, whether you would have been taken out or not, that's an argument to have with yourself. But yeah, if you look at breaker structures, and obviously you wouldn't have closed the trade, you would have still been in. Depends on your stops. But you know, a lot of people who trade today, and I do recommend this as well, is don't have your stops so tight on like that. You know, a lot of people do that, and there's no need to have it that tight. Have it a little bit higher, and look, I'm still in the trade, so it's better than taking a loss. You know, I'd much prefer, you know, just opt in for the larger risk reward. I've said that all the time. Just, you know, if the trade it looks like a good setup and you're not taking it because of the risk reward, then that's just a bit jokey, really. I recommend just taking the trade. Profit's profit at the end of the day. So we just take a look here. So price then obviously broke below here. Right, we had this high and low. We broke below here. Wish you could put these on a favorites, but I always say this. And then obviously price broke here. We have this same, well, we actually have this high, and then we broke here, but it's the same high, so we can actually delete that as our low. Then obviously we didn't break anything here, we just sort of consolidated, then we took out the high, the low, then we have a new high and low structure here. That's an equal high, this is the high. Then we chopped here. So if you were trading based off that, then it lines up with the demand zone anyways. So you can have your stops above, you know, here or here at this point, and then obviously when price chocks, you can close the trade if you do that, right? So if that's the case, you can just have your stops. Just keep moving your stop loss into profit and having it like above the ranges. You sort of like have a delay within the ranges. So when we're within this current range, have it like above this high. You know, when we're in this range, have it above like this high maybe. You know, that way you're giving yourself room to breathe. If you close it based off chocks, then just have it above the, you know, high and manage it quite aggressively that way. If you look at breaker structures, you know, with the, you know, follow through with the chock to close the trade, then obviously at this point price didn't follow through with a new high. We just formed a new high, which seems like, to be honest, it was just a mitigation of this anyways. You know, this POI, price broke structure here, clear order block, right? Price mitigated that, right? This here can be viewed as inducement. This here looks like a little decent setup. However, I wouldn't have taken it, but it's just there for you to, you know, to just eye opening. And then obviously we chuck back bearish here. We have this low, we have this high, and then we have this low with this high, with this low, that low, and then this high, and then we did chuck here, all right? And then we have this high and low, and then we didn't break structure, we came back, and then we chucked here again. We have a new high and low, and then we have this high and low, and obviously price chucked here, and then we broke structure here. So at this point, what you would have done is obviously closed at the breaker structure, and then that would obviously been a, you know, quite a big difference. I was looking for a chock, so it would have been 22.15 compared to 16.54. So yeah, that's pretty much the differences. It's up to you. Like I said, it won't always be like this. You know, sometimes it will chock and then just reverse. So if you're looking for just, you know, a breaker structure, sometimes it will just chock and then rally, and then you've missed out. So again, it's completely up to you on what you want to use. I'm just putting out all the information out there as much as I can, just that way you can take each information you want with an open mind, and you can go and test out some things, you can refine it and then make it into your own little thing. And yeah, but that's pretty much the sort of trade recap. Like I said, I was just targeting a high time from demand. It was a trade, unfortunately, human error, but I will just class it as like a miss buy, sell limit. But yeah, that's pretty much it really. Any questions, guys, make sure you let me know. My DM's always open, but hopefully you understand the thought process behind that. It's just, you know, again, the daily, all the high time frame structure was bullish, bearish, sorry. The daily, yes, we did look at that daily zone, if you guys just remember. We had this daily zone up here, so we knew based off that, because this imbalance, price moved obviously bearish, it seems to be pulling back. We just knew that the high time frame might move bullish. So knowing that will, you know, allow you to take that intraday trade with a perspective of like, okay, price may potentially head back into the supply zone. So that's when we can look at the long-term shorts and look to target, you know, down into high time POIs, and those would be the big R trades. But, you know, if you want to take those intraday trades, you know, weekly, daily, 4 hour moving bearish, we do have a high time frame supply, just be wary of. So don't hold the trade for too long. Intraday, the 15-minute, that was in a bullish range. So what we're going to do is price up into a 15-minute supply, a pretty nice wick supply. It reacted on the lower time frame, you know, the 1 minute. The 15-minute candles started to, you know, kick in and be bearish. So we've seen a switch in that as well to the bears taking control. And then obviously on the 1 minute we got a nice breaker structure entry. So it's quite a solid trade. And then we just traded knowing everything that I just mentioned, and knowing that the 50 minutes in the bullish range, and we're just trading the pullback on a 15-minute with anticipation. That's all it was. And then we just targeted into the 15-minute demand to continue with the high time frame trend, you know, the intraday trend even. So yeah, that's pretty much it really. Like I said, any questions, drop me a message. But yeah, thank you guys for watching. Catch you in the next one.